Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex weekly charts and analysis. Um, Sorry again, guys, about last week. I just wanted to send out another just kind of apology for that one that we had to bail last minute. As many of you knew, Mom was sick. It required immediate attention from me, so unfortunately, we weren't able to grab another speaker or bring anybody else in because it was too last minute, and literally the decision was made minutes before we were supposed to go on. But we're back this week. Everything is good. Actually, Mom is actually doing much better. She did have to go to the hospital, but she's out now. She actually got home yesterday and is doing much better. It's amazing when when you know what's wrong, you can fix it. And again, once they figured it out what it was, everything turned out well. And like I said, Mom is home now. Sister's out here, so everything is doing well. For the people that emailed, thank you guys so much. I really appreciate it. It's always great, from a community like this when you get some emails and you're like, "Hey, I hope everything's going well," even though we've never really met in person. Um, Today is June 7th, 2022. It's amazing that we're in June. Like this year has just absolutely flown by. I didn't think it could go any faster, but every time it just seems like every week it seems like this year is just accelerating through. Some people around the nation, obviously, kids are starting to finish up school. Mine have another, I think we figured out yesterday, like 14 days. They end, I think, June 24th. But pretty soon, we'll be talking about summer vacations and blistering heat, and it's actually nice out today. It's like 74, 75 degrees outside, but pretty soon we're going to be talking about heat waves and hurricanes, as we get into August. So it's right around the corner. And again, today, some craziness in the market. So it's always cool when it's like that. So we have a lot more to talk about, but let's just dive right into things. All right. For those of you that are new, again, welcome. You may be like, your mother was sick. What? I don't know anything about that. Uh, yep. So again, every week we have more new people that are finding the broadcast, and it's awesome. I always get questions and people that message that they're first time listeners. So for those of you who don't know, again, my name is Brian Caprice. I run a company called Keep Trading Simple. I am not an Nadex employee. I've been working with Nadex though for probably close. It's actually been 5 years at this point, doing articles, education summits, as well as analysis sessions. The analysis sessions are kind of my favorite, just because we get to kind of dive in, look at each of the charts, and give you guys kind of different trading opportunities for the week. This picture doesn't do everything, do the family justice. Both the boys are Melissa's height now. The girl is 4. She just turned 4 last week on June 2nd. And there's a boy that's about her age in this picture. But with COVID, obviously, we didn't take family pictures and all that. It's old. I need to update it. But I stay quite busy with 4 little ones. Well, the boys are 12, so I wouldn't say little ones, but they got a ton of activities. So my trading style is a little bit different. I'm very much an if this then that type trader. It works perfectly for these type of segments because, again, I don't spend 18 hours a day sitting in front of a computer watching tick charts go up and down. I'm very much a wait and see. I use alerts. I like technology. If the idea of trading is something you've always wanted to do and you like it, but you don't have 15, 16 hours a day to literally sit in front of a computer in that unhealthy nature, you'll like my style. I'm not a big indicators guy. I will use them. I am a supply and demand price action trader. I will throw some indicators up there, like I'll do things like ATR, which really isn't giving signals or anything like that. And I'll throw fibs up there. A lot of people like looking at Fibonacci. They see it, they hear about it. It's kind of like Star Wars with the Force, right? Fibonacci is kind of the same way inside of the markets. It's this mystical force that everybody believes that like the world revolves around. I like throwing it on there. It's great for me as like a kind of an add-on to what my normal strategy is. I know some people are fib first. I'm always fib second. It's just a confirmation tool. And that's about it. I try to keep it as simple as possible. I got the opportunity to kind of look at this kind of from 2 different standpoints. I learned much like many of you did, retail home ad traders, right? Doing it yourself. When I first started, we didn't really necessarily have YouTube in the same sense that we did now. You would have to find books that were so outdated, but they don't tell you that hey, listen, this was written from data 20 years ago, so it doesn't work anymore, right? Barnes and Noble doesn't have that section. So I learned about a lot of things about what or how to do it the wrong way. But again, whenever you make mistakes, you tend to pull something. I'm a very big believer when something doesn't work, you have to have a lesson from it. You either win or you learn. Those are the only 2 outcomes to everything. So with that said, did spend some time on the inside of the industry as well. I do understand stocks, options, forex, and futures. So all the different asset classes, they're all actually traded rather the same. It's just what type of vehicle you're using for them. The analysis for the most part is exactly the same. But I did get the opportunity to work for one of the big 3 investment banks, and I was an advisor for them for a short while. Got fully licensed, got in, and realized that I literally just had zero. Just the things that I had to go through to be a trader and an advisor they just conflict. It was just impossible to do. Um, but I did learn a lot about bonds and things like that on the inside, which it was an education you would not have been able to get on the outside. I did work on Wall Street, but the actual street, I was never a floor trader. I was never a runner. I know a lot of guys out there, you're like, oh, I was a runner on the exchange. I never did that. I did work in New York City. I did live in the financial district. I did walk past the New York Stock Exchange every day for work for about 2 years. But I actually did work on the, Wall Street and like the bull. Everybody knows the bull in New York City, right? I actually could look out my office window and see the bull. It was that close to where I used to work. Literally, I would come out to the front, turn left, and it was less than a block away is where the bull was. So cool experience. I used to, hang out, happy hour. Actually taught some floor traders as well, power guys on the floor. So cool experience, and I travel around the U.S. and Canada, actually teaching people how to trade. So very, very fun. Learned a lot, and obviously after COVID, I just stayed home now. I just prefer to do it from home. I can do everything these days through technology, and again, if you're not using technology to your benefit, you're missing out. So that's my spiel. Before we get into charts or anything, and I start talking about potential trade setups, I do have to make sure that we cover this Nadex risk disclaimer. Everybody knows this, but for those of you that are new, you may not have heard it before. But trading on Nadex involves risk and may not be appropriate for all. Members risk losing a cost in their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented here is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of Crypto.com. Got to change that. It is 2022. I think I have 2 slides in there because I know that I've changed it multiple times. It's still popping up as 2021. That OCD is kicking in. It's like, wait, what? Yeah. All right. Whoops. I'm already. Obviously, the mouse sensitivity is a little high today. There we go. Let's cover the. This is what we're going to cover today. First thing, we're going to have our upcoming news events. Now, this is one of those weeks. I'd love to say that every week it's just action packed. That there is just stuff. There are news events everywhere. News trading. Unfortunately, this is not one of those weeks, so this section is going to go pretty quick today. We do have an extremely important one though on Friday with month-over-month CPI, and the number. Woo! Yeah. All the back padding is going to probably go away on Friday. If the forecast is coming in as expected, all the back padding we saw in the last month and a half is, make you scratch your head and be like, what were you looking at? So we'll see, but I'll kind of foreshadow that one. Then what we're going to do is we're going to break into the indices and look to see kind of where the opportunity is. This morning, we actually do a morning show every day from 8:45 to 9 a.m. with Todd from Nadex. It's actually up on the YouTube, on Nadex's YouTube page. I mentioned this morning that the Russell, if there was anything that was going to have the ability to go higher today, Russell would be it. And Russell just absolutely just monstrous move early this morning. And then, funny enough, actually retraced of our level up top and has actually pulled back a bit now. So we'll kind of cover that and where the opportunities but could potentially be for the rest of the week. We'll cover Forex. Been a lot of movement in the Forex market, particularly, I don't want to say all the Forex market, but particularly with the yen. The yen, there were some statements late last night that had that market really kind of crazy is the wrong word. I don't want to say crazy because that makes it seem bad, but there's been so much market movement, and in reality, nothing has changed. It was just certain comments were made, and the adjectives that were used kind of make it seem more like nothing's actually changing, but the terminology and I guess the belief is like, wait, what? Did he just say that? So we'll break into that. And then obviously commodities, this has been a big story. A lot of the inflation that we're all battling right now is over here. I can tell you right now, every time I leave my house and drive past the gas station closest to my house, it's like really more. Today, actually, on the way back from dropping the boys at the bus, I have to drop them actually at the local school and then they get shuttled somewhere else. 508. And I know that's not that expensive to some places in the country, but I'm like, 508, really? $5? Are you insane? Really? I know friends of mine that have posted 640. Actually, a friend of mine out in California posted 639. That's what he sent me yesterday. And again, my gas has gone up 20 cents or 25 cents or whatever in the last day. God knows what his is looking like right now. And probably no end in sight. So yeah, we'll talk about commodities and natural gas also through the roof, right? Also through the roof. So yeah, not fun to be a commodities person right now, or be needing commodities. And my opinion is I think it's going to get worse. We're at the stage now where it's summertime. If you think about a lot of what we use, we're not using a lot of commodities right now. A lot of those come in the colder months, and we're getting ready to get there in a few months as well. So We'll see, but commodities is definitely an interesting realm right now to be trading. Now, one thing I will say, if you are new to trading, again, we do kind of break down kind of the biggest market movers and things like that. As far as levels of risk, I would say, and again, I think it's important. I'm always, I lead into every trade focusing on the risk first, not necessarily anything else. Commodities has so much risk in it right now. So if you guys are new traders, or you're not 100%, familiar or comfortable with that market, that would be the one market. As cool as it sounds, you're like, yeah, I love to trade oil, right? As cool as it sounds, there is the most risk in that arena right now. So again, if you are very risk averse or you are new to this one, your first goal should be capital preservation, not chasing, oh my God, what's the hottest thing out there right now? Because that's the biggest mistake you can make. Things like oil and natural gas right now, yeah, I mean it's a thinly enough traded market that it only takes one headline or two headlines, and that thing is jumping to levels that if you didn't know what you were doing, you could lose your entire trading account by one bad trade just with a simple mistake. And the market doesn't care. You step in that arena, market's like, okay, easy money, sure, I'll take it, and you're not getting it back. So again, use caution in the commodities market right now. So with that, let's switch over here and we'll go over to kind of what's happening. So early morning today, we did have a cash rate, basically a cash rate change. Also, it was already predicted they were going to raise it, and it's weird. Yesterday morning, it was supposed to be a 0.75 forecast, and then an hour later, it was a 0.6. And then what did it do? It came in at 0.85. So nobody was right. The market kind of had to readjust for it. Yeah, just weird bouncing back and forth. It's like, wait a second, where are you coming up with this? A lot of times the forecast, you're like, where are you coming up with the forecast? Because that wasn't even close. This one was kind of funny, but there was an immediate response forward as the market adjusted, and then bam, it turned and rolled right back down again. Again, kind of taking advantage of that last minute kind of retail trader play. The rest of the stuff in here is considered yellow, low, but I think important things to note is German factory orders much lower than expected, right? That's kind of a big deal because Germany is really like the main driving factor for the European Union. The numbers have been pretty decent lately, so a lot of people were like, hey, maybe Europe is on the way back again, right? They're not going to raise in June, but July, they already said they're going to raise because, they're coming out and inflation obviously out of control at this point, right? But something like this, seeing German factory orders, it's like, wow, maybe that 0.5 increase is only going to be a 0.25 because they're already having issues and they haven't even started raising and they're already looking bad. So again, could be some issues. A bunch of other small things, Ivy, and then obviously Yellen was talking today. I'm going to say interesting, but I'm using this word very selectively. Yellen, obviously, Treasury Secretary, kind of an important role, right? Used to be. I was kind of shocked that this is orange. And really not much in there beside, I mean, she's basically just talking about, it's kind of like, well, Biden believes this and Biden believes this. So instead of really, she's just kind of a mouthpiece. She's almost like the press secretary where she just kind of this is what Mr. Biden said. Yet Mr. Biden is also saying the same things too. But again, he supports legislative measures that could lower inflation. Okay, sure, that's common sense. I think everybody would agree across the board. Any person in there, but just saying legislative measures and yeah, there's more to it. She was a big transitory person, and we all know that inflation was not transitory. We're at highs, and wait till the end of the week; it's going to get worse. Biden wants to see Congress, move to boost investments in clean energy renewals that will reduce dependence on oil. This is a many-year process, so yes, absolutely. I think he was already doing this with, making some of the early statements he made with, Tesla and pipelines and things like that. I agree with this. I've been saying this. Again, we've been sending billions of dollars overseas. I wish they would have just taken the billions, like sending weapons of war and, sending more and more, cruise missiles and whatever it is. I feel like if they would have put $40 billion into clean energy, you don't have to worry about sanctions against Russia. You just say, we don't need oil anymore. We're completely dependent of it. We don't need it anymore because we have we just invested $40 billion into alternative energies. I think that would have been a lot more detrimental than what's happening right now. So I'm glad that they're doing it. I think it's just a little bit late. And again, is it lip service? Who knows? And then same thing. Yellen also talking about production in the United States decreased during the pandemic because producers did not foresee an increase in demand or the strength of the recovery. Again, a lot of this is politics. The strength of the recovery is due to basically, again, the strength of the recovery is kind of why we're in the problem right now because of the interest rate scenario. That was ultra low interest rates forever. Yeah, that's unfortunately kind of what we're dealing with. And that's it for today. I mean, that was really the big news. We have some yen news tonight. Nothing earth-shattering. The yen's, you can see right here, Japanese yen falls to a 20-year low. Not necessarily bad. Again, a weak yen helps them out. It's not the most fun if you live there, but you can see the dollar yen up 102 in the last 24 hours, and pound yen, the beast over here at 204 in 24 hours. So a lot of movement, right? Now going to tomorrow. Tomorrow, there we go. I'm going to take off the yellow because the yellow is not really major market movers. You can see that there is nothing. Now, there is oil inventory. Obviously, that's going to be very important tomorrow. We'll get the API oil inventory report later on today. We'll see what the forecast is. Actually, let's see if they've given us a forecast. I have to put it low. Let's see. 10:30. They have not given us yet. Now, the last report showed a down draw of 5.1 million barrels a day. This doesn't, or 5.1 million down draw on the supply or the inventories. It doesn't really tell us much because this number can be manipulated based off of how much they want to pipe through the pipeline that week. It doesn't tell you what the demand is. It just shows you what the actual inventory is based off of their projections. Okay. So a lot of people see this as like, oh my God, are we running out of oil? No, they can change this around. It's how much is in tanks, how much flows. So it is something that we do have some control over. But again, seeing it negative tends to make price go a little bit higher. And remember, last Friday we supposedly had this great news where Saudi Arabia said they were going to produce more, and yet the price is continuing to go higher. Okay. But if I remove this, look at this. Nothing on Wednesday. Thursday, basically, we have some data coming out of the European Union. Now, they're not expected to change anything. That's not happening until July, not June. But maybe we'll get some, information. I will say, seeing that that German manufacturing number today, little bit worrying. Like I said, I thought that we were going to get I really thought that we were going to get, maybe a little bit more hawkish tone from it. But now seeing manufacturing down, such a surprise miss to the downside. I really feel like this is at risk now. That, again, I don't know, maybe they'll say we're only doing the 0.25, but I really thought that 0.5 was coming in down the road. I was really excited about it. I was like, oh, this is going to get the euro back in there. Like, yeah, we're going. And then at least Thursday, too, we have Macklin speaking as well. And Macklin is speaking at a press conference on the financial system review. So, again, could be a potential mover for the CAD. And then Friday, this is the big data I was talking about right here, CPI, okay? Every politician out there right now should be sweating bullets on this one. Right now, again, last time they were all patting themselves on the back. Look at this. It's only a 0.3. It was higher than the 0.2, the CPI. And they're saying, oh, this is not our preferred. And it's slowing down because it was much worse before. Look, it was a 1.2. Now it's slowing down. It's 0.3, right? Inflation has peaked, right? What we're doing is this action is working. Well, right now, the forecast is it's coming in at 0.7. So, yeah, I guess 0.7 is better than 1.2, but as we roll additional months off, we know that the year over year was kind of what some people were looking at. Seeing inflation starting to pick up again after 2 interest rate rises, with basically them saying, hey, we're raising a 0.5 and 0.5 the next 2 times, and now it's accelerating still. It shows you what they have is not working. Okay, the recipe is not working. But it's nice that some people are back on the transitory kick, and it's nice that, again, people want to start creating headlines for the elections in October, but here's the reality, guys. We're paying more for things, and the forecast is that it's getting worse. Nothing is getting better. Again, Europe does it all the time. I don't know how we get a no confidence vote in, but again, if we're 3 in and things are still getting worse, and gas is getting higher after strategic oil reserves, to me, it seems like a lot of the ideas that people have been proposing are not working. So we need to make some changes here. And then core, obviously, again, not a great number. Consumer sentiment also expected to be lower. Again, consumer sentiment is something we're hearing a lot about. Normally, this is one of those things that it can kind of help and hurt the indices on Friday. Why it's important now is Target was the news of the morning. Okay, I don't know if you guys are watching or not or listening. Wherever you guys are doing your additional, your research and data, but Target basically has got the fire sale going. If you don't know what I mean, basically everything is on sale at Target now. Reason why is they have way too much inventory. Their inventory is above what they like to have in there. They have big items they can't get rid of because people are changing their spending habits. Again, typically that is the first sign when we see people stop buying at Target and buying at Dollar General and Dollar Tree, which again we saw in the earnings last time. those tend to be the signs that signal recession. Now the Fed is like, we're trying to do a soft landing. Well, the Fed is the same people that said it was going to be transitory inflation, and now we're at 40-year highs with the CPI coming in at 0.7. So I happen to be in the camp that yes, I do believe they are going to send us into a recession. I think the timing of it is not great for elections in the fall. But I also feel that their lack of inaction and wanting to do things is why we're where we are. So I don't know. It's kind of one of those things you like reap what you sow, I guess. I don't know. But anyway, a lot of the big names out there have talked about it. Jamie Dimon last week, we didn't get to talk about it, but was talking about the market's in for like a, what do you say, like a hurricane, tsunami, some natural disaster, but basically that the market is in major trouble, that it's going to get absolutely creamed. And again, a guy as big as that, making those statements, he's not the first one. I doubt he's going to be the last one. You really got to start, wearing and kind of looking at this and being like, all right, are we going in the right direction or are we not? And yeah, depending on where you fall, you may believe yes, you may be wrong, and that's why it's a market. You need a buyer for a seller and a seller for a buyer. So again, there's going to be people on both sides of that trade. Besides that, that's kind of it for the week. I mean, that brings us into Friday. Saturday, nothing. Sunday, nothing. And Monday, nothing either as well. Because, again, we are in the summer. Our next big release after Friday isn't until, again, on Tuesday, where we have PPI, which, again, another gauge of inflation. We don't have a forecast, but you can see it had that one big month in April. March was holding. Does this follow CPI? Is this also higher? Again, remember the CPI was 0.3, supposed to be 0.7. This is 0.5. God, what happens if they come into like a 0.9 or a 1% on a month-over-month basis? Ugh. That would be horrible, right? That would be horrible, right? Yeah, not so much fun. All right, so that's what we have news-wise. Let's see how we kind of, find the rest of this, find the rest of the opportunity for the week. Let's jump over here and let's start off with the VIX. Now, VIX is basically flat. It's slightly green, 0.0, and you can see that it rallied up, and then went down. There's just not enough news out there to really change anything around. Like I said, Yellen didn't really say anything to where you were like, hey, that's new. We need to prepare. Nothing really came of that. So again, all the news for the day is gone. And this is what happens when you don't have any news. It's hard to have a lot of volatility and fear when there's nothing you really need to worry about. So again, you would see this and say, listen, should be great. Everything should be in the green. Everything is pretty close to kind of flat right now. And again, there's not really a major driving factor for it. The target news was in, right? The target news is in now. Excuse me. And I think overall, I think the target news is something that we will see unfolding in the next few months. But right now, I got to realize the market is looking at that. They're looking at that CPI number and saying, holy crap, that's going to be a red day. But if the market's going to be red that day, and the market needs to pre-price and pre-prepare for it, we should have a couple updates in a row in preparation for it. Because if you're going to short something, you want the price to be higher so you can take more money in. So on a fundamental basis, kind of looking at news and kind of looking ahead, because remember, some people are only looking the 5 inches in front of their face, like that 5 minutes, 5-minute chart, tick chart. They're like, I'm watching every single, you're not really seeing much. Try to take a step back, get like a bird's eye view of this, like a battlefield view is like I like to talk about. Seeing a big CPI number on Friday, that number comes in even at 0.7. That is a lot more. And then everybody and their brother would be like, well, it looks like the Fed is also failing us yet again if it is continuing to increase. So yeah, could be a very, very big red day. Typically, you like to see the price go a bit higher. So the dollar is not really contributing much. I mean, the dollar kind of went up, then pulled back again, and it's sitting right on a gap right now. But it hasn't really left that kind of 40-cent level. It's pushed up, but it's started to stabilize itself at this point. Again, large CPI number should give a lot of dollar strength in. And again, with the dollar up here, up in the 101.50, I'm sorry, the 102.50 to 102.90 range, it is kind of high, right? Not high in what it can do, just high in the fact that, again, the average typically tends to be, 98 to like 101. So we are kind of outside the normal range. Now, looking at the indices, I'm going to drop it down to a 15-minute. So, interestingly enough, we had a level over here that we talked about, 40.78. There were some buyers stepping in. And if I draw a line kind of right through that here, you can see that that's exactly what we bounced off of this morning. And that's where we actually opened. Now, with all the negativity we saw with some of the news, we didn't really have a lot of catalyst out there. It was kind of looking for a breakthrough, and it did. And again, I'm gonna get rid of this line now. I'm gonna talk to you about it. I've mentioned the last few weeks, and I think it's important to bring up. I know sometimes, and again, a lot of you guys out there that are listening, most of you are regulars, right? A lot of you are regulars. Every week we have some new people, so that's why I keep bringing it up. And sometimes you guys miss a little bit, come back, and sometimes you're like, well, you said this, and then I didn't quite understand it. But I want to know what you mean, right? So I wanted to make sure that I kind of brought this up again. One of the strategies a lot of kind of amateur traders out there use is kind of the Globex high-low thing. This is another one of those examples. When you look at this, you can say, all right, well, Globex is basically the overnight before the U.S. traders online, right? What a lot of amateur traders and supposed gurus will tell you is, oh, if it's going down, you want to ride the trend, baby, right? You get a pullback, and when it breaks below the Globex high and low, it tells you where the market's going for the day. Okay, if you don't believe me, look it up on YouTube. There's 8 trillion quote professionals that'll tell you that's the way to trade. Okay, one of the easiest ways to trap people is to go out there, create a video on YouTube, talk about some ridiculous amount of money you made in a demo account on it, saying this is how you trade the markets. It happens, I don't know, every single, like, this has probably happened. If you take the 4 indices, this has probably happened. If there are, figure 5 trading days in a week, there's 20 opportunities, right? This probably happens 10 to 12 times a week of the 20 opportunities that exist. Literally, here's your Globex low, right? There's your 7 o'clock in the morning. The U.S. market is not aligned. Here's the 9:15, 9:30. So what did it do when you put it right on the low of this one? The second it breaks through, they tell you, and again, this is why I hate support and resistance, because I do not trade that one. As soon as it breaks through, oh my God, we've broken resistance, or we've broken support, sell. And everybody and their brother sells, and immediately the market pops through, takes your stop loss out, and it's off to the races. That's exactly what it did. Okay. Now, it did go back up to a level, and this is an old level we had marked off. And again, we were using it more for a Harry Potter, but you would have to adjust it to kind of the actual zone and the testing. Magically, look what it bounced off of. And again, this one is just kind of, it's just a bare, tiny miss. But I talk about it every week as well. Besides the Globex trap, the other thing you should be looking for is the 1030 candle, which just happens to be right there. It happens to be the green. So this is one of those ones. Where was the reversal? It closed high, so it literally came in probably at about 10:33. I missed it by 3-4 minutes, something like that, guys. But it's literally the top of the market right here at 10:45. So sometime between this 10:30, 10:45, there's your reversal for the morning at a level that you were looking at. And again, this is the original level with the test. If you were taking the zone right here, kind of the new level that was formed, bam, smacks right into it. Either one would have worked at 10:30. You're looking for that reversal time frame. All it's doing now is kind of pulling back and bringing you into the zone. Some would say it's kind of going to be an inside day. I mean, right now the ES is down 0.12. Okay, so the question is, what do we do with it? Well, we had a zone, again, this down to this 40.78. We knew we had some buyers, had a strong push, and that's exactly what it bounced off of. Now, every time it hits this level of buyers, it's wiping out more and more and more of kind of the people that were in there. I would say there's probably one more hit in here. Is it a zone that I want to take a long from? Not really. I mean, under certain conditions, if we had some basing and it kind of did one of these things, then maybe. But right now, with everything we're hearing out there, with Target pulling back and the car industry making comments and large people out there, I'm primarily a technical-based trader, but I'm also aware of what kind of we're hearing, right? Because, I mean, ask yourself this question, right? Do you think that CNBC or the media or Jim Cramer, do you think the things that he says ever manipulate the market to do something that it did or didn't need to do? Like, if everybody's in gloom and doom phase right now, or they start talking about, this is a bear rally or a bull rally, or, there's a lot of terms that people don't understand. Things like this can be easy to grab, and there's different tools you can use to do it for pullbacks. I mean, again, I mentioned I'll throw fibs on there. If you throw fibs on here, you can see that it just happened to go off of a 50 in a level of sellers. So I talk about I'll use fibs as like a confirmation method to my area or my areas. I would have looked at this and said, oh, you know what? There's a zone there. If this rallies up, that's a great opportunity to get short this position, right? I don't need to take the full risk on it, but it's already starting to pull back lower, right? So that's how you can kind of combine some things. I would say right now, and again, let's back it up a little bit. You can see that we're really kind of stuck more or less inside of a sideways channel. There's not really a lot of news this week. The problem with not a lot of news is there's not a lot of catalyst out there. I mean, there's some headlines that people can make. I mean, if Powell suddenly comes out there and says something, sure, that could move the market. But right now, all eyes are going to be focused on that CPI number and how it's kind of portrayed to us. So this is one of those things. Trading at the open and trading at 10:30 are kind of the two ideal times. Every week I mention this, trying to set up your next trade at 12:30 in the afternoon when you're at lunch and there's nothing going on, always a little bit more difficult. So right now, I would say the way that this is looking, the way that it's driving higher, the way that we're kind of supporting it right here, I would say I'm probably more bearish for the rest of today, and I'd like to see what happens in the European session. I will say, with gas prices jumping the way that they have, and with oil inventory coming in tonight, one of the things that we really haven't seen a lot of yet, and we're starting to see it. I don't want to say we haven't, because we are starting to see it now. Transportation costs are starting to get rolled into other goods and services we are buying, and it's starting to change our habits. Okay. I think that gas will continue to go up. I hate to say it. It drives me absolutely insane. I get goosebumps every time I'm even driving back. The gas station near my house, I don't actually buy from that gas station, right? Because it is a little bit more expensive than one's another minute down the road, right? But when I see 508 out there, it's like, wow, we're 1 week into the summer and it's 508 already. What is it going to do later? Like, oh my God, you know. That will eventually start rolling into food costs a lot more, and goods and services. And with Target pulling back, um, I I would say overall I have to be a bit more bearish. I hate to say it, and I hate to be negative about it, but I'm a bit more bearish with things. So kind of looking for more of a pullback. And again, either of these two levels up here I think are decent. Using that 41.34. If we cannot get back up there today, that could be, again, two confirms in here. If we turn and roll down here and start back up again, this could be an easy short later on down the road. Okay. But again, right now, the next level up top, it's tested, but the next one I'd be looking for is kind of this blue one up here, would be 41.60. Downwise, we have a bigger zone here. I wouldn't mess with this lower one, but I think 50.45 is really the next area that I'm looking at, saying, hey, what is it going to do? Is it going to base? Is it going to go sideways? That will determine kind of where the next piece is. We do have it was an old area, and we did take off of it before, but again, 40.50, pretty big psychological number. There are some sellers above, and again, we do have kind of a racetrack scenario below here where we had a big market push up. I'll tell you right now, this is the 15 minutes, so it's kind of hard to see it as much. But if we start coming through and we start basing inside of like this range in here, remove this, you guys can see that this was a very, very strong push up. We break through this level of basing, probably in there. We could potentially run from here all the way down to here without anybody, and look where we're at. That puts us under 4,000. Do you think that if we get, we're at 41.15. Do you think if we can get down there, do you think the media is going to be all over? Oh my God, we broke 4,000. Told you we're in a recession, right? We're talking like major, and then people are like, we need to get out of the markets, right? It leads to kind of a snowball effect. So I would say right now that's what I'm looking for on this one. Again, this is more of a morning thing for me. It's hard to prepare for this one for the week because there's so many different things that can happen. NQ, very, very similar. Magically, again, this is a zone that we've had. We had this one marked off 1270. I'll move it across. This was the target for it. What did it do? This candle right here, 1045. So again, here, I'll get the exact, hold on, it's so close. Actually, it hit at, right at 1045, the 1045 candle. So I missed it by 15. There's your 30, but you were so close to entry, 1270, right? Again, 15-minute, 10:30 reversals every morning. So this was an interesting one. It kind of opened very, very low, and kind of the same thing that I mentioned. Like, here's the 9 o'clock. The bottom of this is actually at 9 o'clock. When we talk about that trap, people see this here. People are like, okay, give me the open, give me the open, give me the open. Here's 9:45, and right here, this is where the price opened today. And what did it do? It shot immediately down. And here, I'll put it on a 5 minutes so you guys can see it. What did it do? It opened here. It broke below the low of Globex. So what does everybody know that you're supposed to do? All the gurus? Sell. It's going down. There's your confirmation. It broke through lows just in time for it to rally and stop every single person out. So, and what did it do? The old level that we had kind of marked off here. And again, this is on a 5 minute. It's more like, we had it kind of drawn on a 15. It was actually there. And we talked about it pushing deep, so it wasn't the best opportunity. They actually tagged that level, dropped all the way back down again, and then kind of came up again, dropped down again, and then finally broke through on, really 1, 2, 3, and 4 is what broke. And then what did it do? It went all the way up to 1270, grabbed that old level there that we kind of bounced off of in the past. We had it marked as the old level, and it pushed back down. And now Magic, what is it doing? The old buyers here, the old sellers, now are buyers on the other side. But with a break below 12,542, I think this one also has the ability to come back down again. Would actually not be surprised if we get all the way back down and we touch 12,428. Particularly if we get some crazy oil inventory report. And remember, Target is just the next big name. Microsoft has already adjusted earnings down. Target's quite a large name. There's a couple other big boxes out there that can start mentioning the same things because, again, If they leave theirs high and miss, it looks really, really bad. And they're like, well, wait a second, Target did it. Why didn't you say it too, dummy? And that tends to be what you see. So wouldn't be surprised if other ones come in here in short order, and then people are like, wow, everybody's doing it. Wow, right? So it is contagious. YM. And again, the other thing too about NQ is you got a lot of the Tesla and Twitter going back and forth. Elon broke it. Tesla broke it. They're wrong. They breached. They did this. So God only knows what the heck is really, really, truly happening on that one. But I think NQ is a little bit higher at risk. Now, YM. So YM, same thing. There's a bunch of different areas in here. Again, here's that old level. There was your Harry Potter in there. But if you take the more recent kind of the basing and where the confirmation was, the confirmation came in right here. If you bring it across, you can see that we just kind of missed it by just a little tiny bit. This one actually missed by about 15 minutes as well, and that tended to be where the reversal was. Okay, take that in with your confirmation. If you wanted to bring it down, you could and say, hey, wait a second. There's a level right here. It was a drop, a pullback, a push down, and then it confirmed it grabbed that same level and pushed. Wow, it happens to be the 6182. Is I stack the odds in your favor. And again, it is pushed up right now. Some people will be looking at this to go long, though. If you run kind of the overnight, kind of where the open down, people are going to look at this. And unfortunately, everybody that jumped in the 23.6 has pretty much been stopped out at this point. And now it's starting to rally. There's not really anything there for me to really enjoy, to look at and be like, oh, I really like that one for the 50% retracement. Not so much. I mean, this could be profit taking at lunch, then we could continue to push down. But if we run all the way back down to where we started for today, we're looking at 32,639. And again, we are negative from where we were yesterday, but only down 16 points. It's down 0.04. So it's like nothing. You're like, wait a second. You see this and you're like, we got to be up for the day still, right? Nope. Down 0.04 from yesterday, from where the close was. So yeah, kind of the same thing. And I think this one has some room to run. Again, level down here we've talked about. It kind of just missed it. But after this breach here, it's not something we're really looking for. And it has the same type of racetrack scenario where on the bottom side of this, we definitely had some basing. Here, I'll turn this orange. You can see it a little bit better. And if we look below that, there's no buyers until way down here again, right? So we extend this across. You guys can see what a potential trade setup will look to be. And again, I don't know when. I know it's not an if, it's a when, right? It will eventually kick this in, and I don't know if it's going to be tomorrow, the day after, maybe 6 months from now. I don't know. But if so, I'm looking for some type of a basing level right here, a break somewhere below 32,480, right? And again, some type of a confirmation, and then look for it to, have a nice little push to the downside. Don't know when, but again, this is why technology is great. Set yourself an alert, look for a breach of that number, and let it come to you. You shouldn't be chasing. Here's Russell. So Russell, this morning when we were talking with Todd's presentation, it was right around 9 o'clock, and we talked about how we were at a bottom, we're in close range, and I mentioned that right now, if any of these is going green for the day, it would be the Russell. It had the best chance of skyrocketing, right? Based off of what we're seeing, again, 50% buyers were in here before, did have a great level. Look, everything looked good. It kind of rallied up and then pulled right back before the open. These were all things like, yep, looking to go long, and then monstrous move. And what did it do? It went right up, it grabbed this level, and then did the same trade that we had over here, right? Went back to the confirmed area of sellers and has dropped. Now, kind of the same thing. If you take kind of the low to high, you can see anybody that tried to get on the 23.6 to be aggressive, to be like, yep, they're all going up today. Everything's going to the green. Russell is the strongest. We're leading the way. Yeah, I went all the way down here. Like, there's not even, I don't even think, for you just to get back to where the top is, I guess it went a little bit farther. So it basically went almost as much down as what you're looking for profit, not necessarily the best way to do it. And me for looking at this one as well, not really interested in taking this one long. Again, when I talked about it this morning, yeah, this was the result right now. So I don't know, maybe Uncle Warren was watching again. I love when Uncle Warren watches the programs, right? My students all joke about that. Uncle Warren out there, right? He listens to our session and then the market does this. And I'm like, when I said, and again, when I make these, I don't make recommendations. I'm just kind of sharing with you guys what I see and what my beliefs are about the market. Did I expect that we were going to raise this much that fast in like 3 hours, going up, 37 something points? No, I mean, I expected, we'd have something. This is more than what I thought. So, again, it's a big joke. Uncle Warren does not, I don't think he watches the program. If he does, hello. But again, a lot of times you'll see these moves, they happen much faster. So I'm not out here when I say that, look, I mentioned this. It's not an I told you guys so. I'm not smarter than anybody else out there. I'm just sharing my experience and my opinions. but some great trading opportunity. And again, I'm all about stacking the odds in your favor. I love the session rollover. I love the fact that there were 50% traders stepping in there. Algorithms were looking at that at the same time. And then again, knowing basic traps that retail traders are kind of spoon fed, right? That the supposed experts, I use this strategy. Yeah, but the other 99 strategies, the other 99 times you ran the strategy, it didn't work, but you're going to try to sell it to people or give them free education based off of this. It's a lot of times it becomes easy, right? So anyway, with it right now, again, it is the strongest on the day. If everything takes a positive spin, could we go higher? Sure. But I'm looking at that CPI number and they start raising interest rates faster, it hurts the Russell the most. So is the Russell preparing for a bigger waterfall style drop on Friday? Absolutely could be. Absolutely could be. And if you look at this, if I got to go back and it's like, whoa, look at this. There's nothing here. And you're right. We got a lot to go. And really the next major point is man, all the way up here at 1945. So again, 45 points higher than where we are. It was a 37 point rise this morning. We're within striking distance of this, right? We're within striking distance of this, especially with that CPI number. Let's see. Let's go across and look at some of the currencies. Now, Aussie is a pretty interesting pair. Yeah, I got to take it off 15. So the only thing, and this is one of those questions too, when you guys are setting up your charts, okay? Everybody has opinion on what your favorite chart is. I like to look at 30s, but when I was younger and not as experienced, I did actually prefer the lower time frames because I felt like I couldn't, I needed to see more of what was happening. As I've looked at charts longer and longer and longer, I actually prefer looking at 30-minute charts more. The reason why, though, part of that is because I can look at a 30-minute and know what the smaller 15s and the 5s did. You still may want to go lower. And for something that's a 24-hour market, I feel that the 30s give me the perfect view of it, right? But you'll always see me switch down to 15 when I talk about indices because it has a compressed trading day. My opinion on it is you need to look at a lower time frame because you don't have the full 24 hours. You don't have many rolling markets out there that you can, kind of, cycle through. So that's kind of why I look at it this way. Hopefully that makes sense, but that's just why I do it. But when I look at a currency chart, if it's on 15, I'm like, holy crap, why is there so many candles? I can't see this. It gets crazy. But anyway, you'll see this crazy spike, and that was the interest rate change. Again, kind of threw everybody out of whack. It was like, whoa, you had 0.75, then it was 0.6, now it's 0.8. Like, what are you doing? Like the market had to repair. And this is what, again, I trade multiple different asset classes, right? They all have their pros and cons out there. Had you been looking at this and saying, hey, listen, it's expected to be big. And again, why did this go up like this? Yeah, because they raised the interest rate. But immediately you'll notice, well, wait a second, why did it tank back down again? Instantaneously, right? It was up, down, and then boom, it went lower. It actually went even lower this morning. Again, it's people trying to react to the news after the news is already in, right? But here's the cool thing, right? Understanding your Nadex products, one of the best things about options is it gives you the right to do something. You're not obligated to do things, okay? If you like the rush, right? But you still are very risk averse, this is where binaries come in. This is a very, very big move in a very, very short period of time. I mean, this candle top to bottom is about 66 pips, okay? When you're trading news, use short duration binary contracts or the strike width is very, very small. This is a lot of strikes, and you could have taken very, very little risks expecting some type of craziness in here. And again, say you were short this position, or say you got into basically the equivalent of what a put would be, right? You're trying to profit when the price goes down. In an option, when this goes higher, you didn't lose anything, right? It didn't take you out of the position and then ended up coming back down again. You were still probably profitable in the position. Where if you're taking the spot, the cash realm, not using options, this could have cost you a whole heck of a lot of money. Okay, so again, always important to understand the pros and the cons of the assets you are trading. Okay, I don't personally believe that there is one that is the best. There are times when some are better than others, and like I said, there's pros and cons. Knockouts are one thing that at Nadex a lot of people like. This is a horrible knockout, knockout type position. It went so fast. Trying to take a little bit of risk, oh my God, it definitely probably stopped two of these things out. I don't know, I'd have to check it, but I'm pretty sure that at least 2 or 3 knockouts at the top side got blown up from this, only to turn around and come back lower. Where a call spread, you were safe, and a binary, you were safe. But right now, you can see, again, it makes it difficult because there is a big wick in there. really this one is kind of stuck in a sideways based channel. You can see that we're kind of, let's move this so it makes it easy. Here was the original top to bottom. Once it hits the 78.6, my opinion is if it's blowing through everything else, it's done everything else, I don't need it anymore. And then you can remove it, right? That was from bottom to top. Taking top to bottom, which again is the next the next way to draw it for many people, you can see that we kind of came up and we banged off that 50. Now, in the truth of this is, anybody that's looking at this is saying, yeah, it's a 50% retracement. Yeah, well, you've already gotten stopped out here. It blew through the 61.8 as well, so you need to be cautious about it. Even with this kind of zone drawn here between the 50 and 60, based off my rules and my strategy, I'm looking for unfilled orders in the market. If price was able to jump through that means there's no orders in here anymore. So there's no zone here anymore. I do think it's a zone that we could potentially see a reversal from. You can see that it went off the 50 right there. But right now, with this price slicing through, you kind of want to see new levels being put in. Now, you may say, well, why is this going higher? Well, they did raise their interest rate. Is a fundamental change in the market. We'll see what the dollar version is. And as I said, seeing dollar weakness Tuesday, Wednesday, Thursday, just for massive dollar strength coming in on Friday, absolutely something that the market would do. They would weaken it all week. So it's kind of going in line. Right now on this one, I'd wait till it gets a little bit higher. As far as bottom side of things, again, there's that same little trap, right? Oh my God, it broke through the Globex. And as soon as, again, whether it's a Globe, it's not really Globex because that's more futures, but I mean, yes, there is also dollar futures. This is more just support and resistance. And that's why I don't really necessarily not into support and resistance. I prefer zones and things like that. So again, nice trade. I look for reversal. I do think, again, dollar strength will creep back in. It has more reason to be bullish. But right now, again, Aussie just raised. The market will bake it in, and then we'll kind of roll from there. Aussie yen. So Aussie yen, you can see it had kind of the same spike. I mean, here's where the news was. We were talking about it potentially pulling back ahead of time. We're like, maybe we'll see weakness. Maybe we can get some power with the yen just in time for the news to come out, and then we'll explode. It just ground higher, and then when the news came out, it did go back up again, and we're getting close to there. So I'll delete this one, but you can see it did definitely spike. We are looking for a spike for the news. We were prepared for that. We were just wanted it to come down first to give us a better entry. It didn't. It just continued to rally higher and then ended up not disappointing. I mean, it went exactly where the movement afterwards was exactly what we expected. But now we are coming up to the 95.77. So the yen. The yen is in a very interesting spot, okay? These are the comments that sent the yen flying, and basically this is their central bank. Their most powerful person in the bank says, we're going to keep powerful easing in. Wow, powerful easing. You're keeping it in, right? We're talking about raising interest rates here because our inflation is out of control. Japan only expects to keep this. Look, we expect CPI to keep rising around 2%. 2% is fine. That's what people are looking for, 2 to 2.5. So at 2%, they're where they should be, right? They haven't recovered to the same extent. They didn't have the same problems. Their interest rates were already at zero. They didn't go from where ours were dropping. They didn't go on the crazy mission. So again, they're not in bad of a situation on the way back up again. And the economy is recovering as a trend. Again, not bad for them. But people see this, that we're going to continue to do this. We don't need to raise it anytime soon. And boom, puts it off to the races. And again, that's why you're seeing this one maintain its height and not shifting around. Okay, so 95.77 is a level. I'd be cautious. It's pushed it all the way up to this brink here. Probably not a lot up here. We really need some strength and kind of roll over in the yen to come in. And again, but I would say most likely the euro yen or pound yen would be the place to do it. Not so much with the Aussie dollar. Okay, the Aussie dollar has a lot of links over to China as well. Euro pound. Well, this one as well. We talked about this yesterday morning at the 85, 84 figure. It was the top. And again, if we ran fibs, we were like, wait a second, that's cool. You can see it slice through the 23.6. Whoops, no trend there. Came down and grabbed the 50 and did a little bit of a bounce and kind of went pretty deep. I guess if you had taken this full stop loss in here, I guess you didn't get stopped out, but that was quite a lot. And then it based on there. We went back up again, and all it did was grab the same level up top. All I did was extend that across, and boom, sliced all the way through. So at this point, 78.6 is cranked. It's hit. I don't care anymore. But again, you did get a second entry off the top. Delete it. Take it from the top over here. Go high to low. Actually, the high to low is there. And magically, now you can say, well, wait a second. Where's my 50 and 23.6? Now, there's a 23.6. And again, I'm in agreement with this one. I definitely think this one is pound strength. It should be kind of more in here. But there is a level sitting kind of hidden right there at the 50. So if we are able to kind of turn and roll, not that there's a ton of data this week, but we do have that European data on Thursday. If for some reason we do turn and roll back up again and get some European strength, it's only 40 pips away. You can absolutely get there before Thursday when we're getting the monetary policy statement. turn, look for this one to drop back to the downside. So I like 85.40. And then again, we have a level down here that's been hit numerous times. We're looking for a bit of a racetrack, and that's coming in just a little bit lower. So we got some room for it. But I am on the bullish side of this one today. I'm sorry, the pound bull. So again, bearish side of this one. I think this one continues to go lower. And really, until we get much, much lower, there's not really many areas down here that I'm like, yep, I love that buy. So that's just my take on it. Euro yen. Euro yen obviously continue to push higher. We know why. We just went through the yen again. Same thing. You're going to see that this is not. It's not like at an all-time high spot. It's still struggling. Europe is still struggling. There is a zone here, so if there is profit taking coming in on the yen, as we've seen in the past, I mean, it did just bounce off of 142. Again, double zero psychological level. Could this one turn and roll? Probably. But right now for me here, this is kind of the weak versus the weak. Right? Yeah, the euro's weak, but the yen is weak. I prefer to find setups where you have one strong, one weak. I don't like too strong. Too weak is also not necessarily my favorite. Does this have the potential or power to roll over? I think the answer is yes. After a big push up in price like we got from the yen in the last 24 hours, it tends to retrace back a bit. So I do think that there is probably a short in here. Again, ways to play this. If you could find a knockout or a call spread or even something weekly wise, it's rather cheap to get into up here. Again, every trade you take is risk versus reward. I think there's probably some type of potential in some type of a short. Euro dollar, you can see like, wait a second, euro's not up here. Wait, why is it not up here? And this one, we'd actually talked about a level at the 50, and it hit it here. You can actually see it. It hit it here and then spiked and then grabbed some more sellers and kind of went down and it hit it. It hit it. It hit it. It's like, oh God, there's your one, there's your two, there's your three, and then boom, Harry Potter and went lower, right? So the 50 is acting right now as more of a kind of a magnet, right? It's sucking it back in. The 50, right? Hit it, went above it, went below it, rode along it, came back. Hit it again, went lower. Hit it again, went lower. Pushed through, came back and grabbed it again. So the 50 is like a magnet in this one. And we knew this one would be hard just because this is a kind of an extended level of buyers, and it did. It hit it, it hit it, hit it, finally broke through them, and it was like, ah, and then it kind of continued to push. So is it the 78.6? I'm not concerned about it now. We did have the level down here at 106.50, and if I bring it across, you can see that's kind of what it bounced off of. Missed it by just like a little tiny bit. Adding some kind of extra analysis in this one, you can see that there is some stuff going on between the 50 and the 61.8. None of it's super clear. If I had to say, like if you forced me with a gun saying, listen, it's right there, there's one, give me something, I would say probably the 61.8 level. It's already kind of banked off of this, and I would say that level is coming in at 107.16. If we do get up there, yes, I can see this one rolling down. Kind of the same thinking, right? Do we push up all week for this one to turn and roll for Friday? Pound yen, obviously going higher. I'm inside of the bull camp for the pound. The yen has obviously had weakness. I don't really, right now I don't really have really anything. I mean, if we look at kind of this level here, you could say, hey, listen, there's basing right there, but look, 1, 2, 3-ish, 4-ish, not really interested in it. I would say that the next major level, and again, I'll extend both these across. Really, the first time I mean, at an aggressive stance, looking for a roll potentially at 67.58. I actually prefer and actually like the 168.19 better, but I don't have anything higher time frame all the way up until 160, 400 points away, or actually I guess 300 points away because we're at 167 right now. So a little bit more movement in this one. I like this one long. I don't like it as necessarily as much short, but there is some areas where profit taking could come in. Again, if the yen turns and stops in one of these two areas, there could be a potential short. Pound dollar, you can see, is also rallying, and this just shows you the amount of dollar or pound strength we have in the market. Now, we did have an area here, and again, this one had been pushed to the brink. It was original zone drawn here up at 61.8, kind of pushed it to the air, pushed it halfway in again, and then hit it again. Not the strongest, and then all of a sudden, what did it do? It started to base in here, right? You're like, yeah, it's breaking. Question is, where does it stop? There are some sellers up here at 78.6. Don't like it once it hits that, as I've mentioned before, so I'll take it off. We don't necessarily need them right now. And I would say there's two levels up top. I would say my favorite, not favorite, but the one I prefer more on this one is 126.72. There is a lot of stuff going on right here around 126.50. It didn't leave super fast, but again, that would be kind of a more aggressive stance on this one of kind of getting in at that piece. Right now, 125, I can remove that. We can leave this. Actually, let's move this down a little bit. We're going to kind of box that off. And I would say right now, these are kind of my two brackets, top and bottom, would be 126.50 and 124.50 to the downside, that 200 pip range there. Dollar CAD. So dollar CAD. I drew this down to 125. I was looking to get all the way down there. We got down to 125.37. So when we pushed it here, you can see that it did come up, grab the 50, and what it did is it gave us actually a zone earlier today, right? It gave us kind of a telltale sign. Okay, listen, there's the top. Well, right here was the 8 o'clock candle. We pulled back up before the news and has done nothing but head straight down. Now, the CAD, and again, you may say, well, why did it do that? Well, there was some CAD data today, but the dollar CAD is a I'd say more advanced position to play right now. Why? Because you have all the things going on with the dollar. The CAD has all their own data as well as the CAD is a proxy for oil, which, by the way, oil is up at a 119. So it's a low 119, bringing CAD strength in. So a lot of factors with this one. Really, for me right now, again, you could say, hey, wait a second. Isn't there a turning point here? We're in a level. I'm not really looking. We're within such close range, 36 pips of coming into that 125. I'm really, and again, this purple area, I'm looking for it to come down in base somewhere down here for a reversal off 125. I do think this comes down. I do think CPI drives this higher. Again, oil is at 119 with everything that we've done to lower oil prices. It's only getting worse. I think we will get some type of reprieve maybe tomorrow, but I think this is preparing for CPI. So right now, bearish dollar CAD, looking for it to hit 125, form a base somewhere, and then looking for confirmation bounce higher. Dollar Swiss, continuing to go. Now, I was talking about this yesterday for my group that the 23.6 was at 96. It was just basing, so it wasn't like it was a quick pullback or anything. The opportunity wasn't great, but if you were really looking for something, again, it did get front run here. It came up and it based in there. It didn't really hold. Again, from the original zone, we had your 1, 2. This is kind of your third hit from it. And then again, this would be hit number 4, and that's kind of what broke the camel's back. So it did end up going through. There's 2 other small zones you can see right here. It hit it, it pulled back again, it hit it, it left it again without going through the top. And once you see that it put a higher low in, kind of a sign that, listen, it pulled back to grab buyers, it's going long, right? All it did was go to the next level we had marked off, did not go through the top. And again, now it's coming back down, and the old sellers are now supporting it on the bottom side. So it's kind of playing ping pong back and forth. If this goes any higher, there is a racetrack, and I would say that the 50% retracement level in this one, not really concerned about it, but I do think there's a level somewhere up here around the 61.8. So if we break through, could we go long here? I would say, yeah, there's probably a long sit in here somewhere. And again, this is dollar strength coming in. There's your 1 to 3. There's plenty of room before there's any type of reversal coming in. And again, I would say get your target out on this one before 98.60. Okay. Dollar yen. I mentioned it earlier this week as well. Not really looking for shorts for the dollar yen. Like I said, until 135, which is all the way up here, the yen is not really in problem territory. It's pulled back today. I do believe this one has the ability to go to 135, not because the yen is so weak and it's horrible, but just because with the dollar, especially if that CPI number is high, that's going to bring more strength than the market has factored in. I think that's able to go higher. And at this point, this was a larger time frame level. We've kind of broken through and pulled back to it. Let's grab fibs up. And again, you can see when I did that old level that we had talked about before, the 31.19, magically now is cut in half by the 50. So probably a level we want to watch out to. And this would be a down, just so everybody knows, downside target, not necessarily an area to go long. But if we start to roll, start to go lower, you could say, well, wait a second, aren't we going lower now? You could say that, sure. I mean, there's your kind of downward sloping channel, right? Do we grind down? Sure, but there's a couple small areas in here. Cryptos are down. They have not retraced. They literally at 10:30 yesterday morning went straight down and have been holding. There is a bipartisan bill out there for regulation. We'll hear more about that as it unfolds. But again, cryptos are all pretty deep in the red. Yesterday was risk on. Today is risk off. Again, bonds are obviously rallying because of it. That's pretty natural to see. I mentioned CL. There's where we got in CL. This is kind of what we drew this morning. We were hovering around the 1822. There's a level there, and you can see it spent a lot of time in there, really kind of chopping back and forth, right? Boom, 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 and then just kind of ran into some problems. Because it's kind of in this area, 120 was something. We've had this level. We've talked about it. We banked off of it twice now. Hit it again. Until we see the oil inventory, I think this is depth. I think it's absolutely a play for tomorrow. What that play looks like, I don't know. We have to see what the oil inventory report today. If you guys don't know what that is, when we get off today, search in your browser, type in API oil inventory report, and you'll get that at the close of business today. That is the industry-specific report. It doesn't necessarily follow dead on, or I guess the report we have tomorrow, the official government one, doesn't necessarily follow at all times, but the market tends to make some trades off of it, particularly in the European session. With us holding up at 120, if we have a decent sized surplus, we could have one of these in the overnight before our number tomorrow. We could push all the way back down to this 116.10 number. It is a 50% retracement level for fibs. There is basing in there. There is a nice pop, so it is a level that, again, people will be looking at. If we can get over there at 116.10 before the news tomorrow, also could be a pop for a news trade. Okay, natural gas. Yeah, we're holding high. But again, I think any opportunity we can for pullbacks to get in, I think are decent. As I mentioned, I hate to say this, we can hit $10. But right now, this was kind of 1 day's worth of movement. Now it's like half of a day's worth of movement, right? It's only 60 cents now. I don't know. I'm afraid we can get to 110. I'm afraid we can get to $10 before the end of the week at this point. So it's slowing down right now. The inventory report for this is on Thursday, but again, they're going to look at oil and say, okay, what are we doing? And again, any additional sanctions, any additional, like, we're not going to use Russian gas, or we're going to do this, or we're going to do that, has been a lightning rod here. So, yeah. Natural gas is a little bit more insulated from hurricanes. That tends to be more on the oil side of things. Natural gas, for the most part, is based out of Pennsylvania, so we don't have many earthquakes, hurricanes, tornadoes, or locusts up there yet. But again, God knows if we get there by the end of the year. Who knows? Gold rallying back again. We talked about a short. Again, it was a kind of a racetrack-based trade, some basing level, and again, it hit it, based in again, came back down, Harry Pottered itself, and went all the way to the target, and is now kind of pushing back. I would say on this one too, we went to the 78, so I can officially remove it. If you switch us from high to low, you can see that right around the 50, there is some selling. It's not super clean. I don't love it. I am back on the bearish camp as far as gold goes this week. With that CPI number, the Fed is going to absolutely have to do something. It's nice that Biden has empowered the Fed. He didn't do anything different than they had beforehand, but again, he's empowered them to do more. So it's not transitory after they all said it was going to be transitory. So I was going to say, if you guys are looking for shorts, I think a short on this one is pretty decent. Overall targets for shorts, though, we're down to 18.30.25-ish. This is one that I'm watching particularly on Friday. Silver, kind of the same thing. Silver came down. It's pulling back up. Again, at this point, I'll leave it on because it's only hit the 61.8. Again, there's your 22. See, I bet you this is right at the 50 for high to low. Yeah, right at the 50. So I would say right now for me too, silver probably more bearish than anything else. But again, there is some kind of links into China as well for this one, just the China industry, and particularly Australia. If Australia's economy is coming back again, that could actually help drive silver a bit more as well. So, all right. So again, that's commodities. Like I said, the most risk out there in the market right now is currently in commodities. There's no stopping natural, oil, we are high, so I'm kind of getting the camp of we could probably see a little bit of a pullback. Natural gas, I'd love for it to pull back. I think it needs to pull back, but I think we have the ability to hit 10 first. Like, this 10 is like $100 in oil the first time years ago. And then again, with CPI, gold and silver are going to come on the plate. So a lot of volatility based over in the futures market. All right. With that said, again, we kind of sped up there at the end, as we always do. A lot to talk about today. A lot of trading opportunity in a week that we don't have a lot of news. A lot of technical levels are out there, and we did a little bit more education today than we normally do. But mark your calendars for Tuesday, June 14th. Again, smack in the middle of June. It's crazy. I can't believe it. But if you have any questions about anything I covered today, you're more than welcome to email me. support@keeptradingsimple.com. As you guys know, mom is home, but I am still kind of dealing with playing catch up from everything from last week, where I kind of got pulled out of everything. So if you message me and I don't get back to you right away, just give me a couple of extra days, and I'd appreciate it. If not, we'll catch you next week. And don't forget, we have the morning show every morning on YouTube on Nadex's page, 8:45 to 9 a.m., where we cover what's hot for the day, kind of an abbreviated session in 15 minutes for kind of what we see as the best opportunities for the day. So with that said, I'm out of here. Thank you guys so much again, and I'll catch you guys next week.